So here we go. Today, the Santa Claus rally is officially supposed to start. But will it happen this year? And how does this affect our positions? Also, today, the core PCE report has been released. And I'm just looking at my monitor and I think, what the heck is going on here?
I'm sorry, Marcus. I had to bring Santa into the show for a little bit of this Santa Claus rally, and
There you go. For the
there we
Santa Claus
go.
rally. Jeez, you should have told me. I would have brought my hat. So,
Sorry to throw you off, but it was
I
all
don't
for
even know what
fun.
I was saying. PCE report, something like this. Anyhow, so welcome to Coffee with Marcus and Morgan. Today is Friday, December 22nd, and this is our last show for the year. Next week, we're taking a week off. So, yes, I should have brought my Santa hat here.
Well, it's all right. I'll wear one for the both of us, Marcus. And hey, it does look like the Santa Claus rally is in effect.
All right. So, I mean, we've been talking about the Santa Claus rally this week, but let's briefly recap. So, Santa Claus rally is oops, that is way too small. Nobody can see anything there. There we go. It's the last 5 days of the year, the last 5 trading days, which officially starts today, and the first 2 days of trading in the next year.
Yep. So, the Santa Claus rally term or phrase is used really loosely in the investment world, but technically speaking, this is the period starting today. And why does it matter? Well, the S&P has gained 79% of the time for this 7-day period with an average gain of 1.66%. That data is from Bank of America. And that's not too shabby for a 7-day period, Marcus.
That is not shabby at all, and I mean this could push the S&P to new highs because are we there yet? No, we're not there yet, right? I mean we're still waiting for new all-time highs in the S&P. The Dow made it for the S&P. Maybe we're getting there.
We'll have to see. It could be that a Santa Claus rally does do the trick. Doesn't look like it's going to happen today, but we should close the week at a session or a weekly high, and that would be the eighth straight winning week for the S&P.
Yeah, and it's really interesting because on Wednesday we had this little scare where the market started selling off, and I mean, we know that the market is kind of overbought and due for a correction, and we thought that it would start there, but then we also saw that yesterday the markets were bouncing back, and today. At first, a little bit of a follow through. Right now, pulling back, and I mean, we have the eighth straight winning week in a row. I'm not surprised that right now some investors are taking money off the table, especially since next week we're not the only ones taking off. I mean, the big banks are usually close. I mean, they always have some emergent clerks there, but I mean, everybody's going on vacation over the next few days.
Yeah, you usually see some lighter, slower volume and uh, hobby traders. Not a whole lot moving the market. And but Marcus, going back to that Wednesday scare, right? There was this conspiracy theory about zero DTE, and we talked about it in our mastermind group, and also brought it up in the video that we did here. I don't believe in that conspiracy theory, and I did see an interview with I think Mandy Zhu, head of derivatives at the CBOE. It was interesting because I heard her say that market makers were buying more than selling during that slide. So if anything, the zero DTE and market makers hedging positions actually could have helped stabilize the market because they were net long at that period. And at 47.65 strike imbalance was so minor compared to the overall volume for the day. It was much ado about nothing. So, anyway, I just thought I'd throw that out there because I know that some people grabbed hold of that zero DTE conspiracy and how that was the problem.
Doesn't
It
seem this
smelled
way.
a little funny.
All right. So, what's moving the markets today? Let's take a look at the economic calendar because besides the Santa Claus rally, we also had the core PCE price index being released, coming in with a little bit of surprise. And this is why earlier today the markets were jumping higher.
Exactly. So this is the last major report of 2023, and coming in with a 1% increase, which actually was lower than the 2% point two. Sorry, 0.1% increase, which was lower than the 0.2% increase expected. This supports case for cuts, wouldn't you think, Marcus?
Yes, especially I saw. Hold on, let me show you this here, because this is where we see that on a 6 months basis, the core PCE was up 1.9%, below the Fed's 12 months target, and that's exactly what you said. So this indicates that if the current trend continues, the Fed has essentially reached its goal. So I mean, all we need to do is right now make sure that inflation is no longer ticking up, that we come always in line with the expectations. And we have been saying it for a year, right? If we come in with these increases that we have, let me go back to the economic calendar here really quick. So if we have these increases of 0.1 and 0.2% per month, right? So this gives us anywhere around what? 1.2% to 2.4% for the year. So, kind of exactly where the Fed wants to be. And it's just good to see that over the last 6 months trailing, we are right now with the core PCE, which is the Fed's favorite inflation gauge, at 1.9, just shy of the 2% that the Fed set as an inflation goal.
Yeah, I mean, it does seem to support that peak inflation has come and gone, and it's just a matter of how much we slow down. And this was a good report for the Fed.
It was. Also, the other thing was good to see durable goods orders. I mean, durable goods is anything that you can't consume right away. So it's like what fridges are in there, washing machines, right? I mean, durable goods, stuff that holds. And this came in much better than expected. The previous months, shoppers were actually saying, no, we're not buying the more expensive stuff. But now going up again, and this is back in line with the consumer confidence. Consumer confidence is up, so the soft landing, the Goldilocks scenario, might actually happen.
Yeah, not too bad when it comes to data to support that.
Yeah. So I just wanted to see if there's anything on the economic calendar for next week. Not really. I mean, I would have been surprised if there was, because Monday markets are closed because of Christmas, and then we have the home price index on Tuesday, but not a whole lot going on. And this is why we also will take a week off, because I mean the markets should be drifting higher according to the Santa Claus rally, and so I don't think that we'll miss anything dramatic that's going to happen next week.
Yeah, I I'm gonna be focused on other things. Take a look at what's going on, but not planning on doing any heavy lifting next week.
Yeah. So, I mean, we also see today that not a whole lot going on. I mean, most our stocks are slightly up, and then we have, of course, Nike going down 10%. So, we need to take a look at this and see what is happening here. Let's bring up Nike.
Yeah, look at that. So Nike getting hammered. Now they reported mixed earnings, but better than expected earnings per share, a revenue miss. But probably the bigger concern here is that they lowered their sales outlook and announced plans to cut costs by about 2 billion over the next 3 years.
Yeah, and that's kind of what we always said. We will still feel the effects of these rate hikes next year because, I mean, FedEx also said that, okay, we are expecting less sales. In fact, we believe that sales might be shrinking, decreasing. Nike now, the next one following. So, I mean, this where in the first quarter, we could actually see that we're feeling the effects of the interest rates hike, not only um, for the inflation going down, but also slowing down the economy.
And I saw a quote from the CFO from Nike, Matthew Friend. He warned of a highly promotional retail environment. I wonder exactly what that means. Maybe people wanting discounts, but either way, it kind of triggered a slide in retail in general because you had Under Armour A down.
Yep.
So 3% slide there, and then Lululemon, Lulu down a little bit, but Foot Locker also hit on this.
Okay, FL Foot Locker, yeah, down 5%. I mean, all crawling back right now, but it seems that Nike at first, took all of these others down here as well.
Yep.
All right, what else is going on? I mean, VIX is camping out here at a little bit higher levels, which is good. So we finally can get some premium. Bitcoin is trying to break through 44,000 again. On a 5-minute chart, we see that did it overnight, did it yesterday in the session. So, but right now cannot significantly break through the 44,000. So, I don't know. We'll see what's happening there.
Looks like it wants to, though.
Yeah. All right. Let's take a look at our positions. But before we do, you know that we have our holiday calendar and it is coming to an end. We are on the last row today on the 22nd.
Funny.
Yeah. So we know that you enjoyed the last one. So we thought might as well play it for you. And then we'll take a look at our existing positions and what's happening here. We're on helium. You did actually play an instrument, not necessarily the guitar, but the team does a great job with it. Really enjoying it.
That's
All right.
great. Hey, you're jamming on that guitar, Marcus. I'm impressed.
Yeah, well, can't sing, can't dance. I'm German. It's in the blood. But I mean, you were part of a band back in the days.
In the past, I was known to play a little saxophone and guitar. But Marcus, little known fact, you actually have those outfits in your closet, right?
Yeah. Shh. All right, let's take a look at our positions right now. 3 positions still in our portfolio right now with markets just being super quiet. Didn't find anything that I want to trade. CSIQ here, slightly higher again. So looking good. Not much else to say here. NEE today moving higher, nicely obeying our trend line here. So, I mean, also not much to say. If you have been following the show, you already know what's going on. But UPS showing here some action. And I mean, UPS, this is just great. I'm loving it.
Yeah, nice little bounce there after the reaction to FedEx earnings. So this is looking pretty good, filling that gap. It filled the gap on the pullback, but getting back up to where we gapped higher. And you sold calls, Marcus.
Yeah, because I mean, my cost basis is at 157.50. I already sold calls last week at 160, so above my assigned price. This way, I'm also getting $2.50 per share that I own, and I own 1,200 shares. So that would be a nice bonus. Now, I did sell it last week. Then I bought them back during this slide. And this morning, when UPS was pushing higher, I sold them again. So a little bit of double dipping here. And if you look at the calculator, so I sold those. Let me actually bring it up slightly differently because I want to show everybody a few things that's happening here. So here we go. So again, I sold the 160 for $1.50. Jeez, what's happening with my pen here? Oh, there we go. Okay. Anyhow, for $1.50, getting $1,800 in premium right away, plus if I'm getting called away next week because I sold it for next week, I would make another $3,000 on the stock for a total of $4,800. So I'm okay with this. This worked out really, really great. I was a little bit surprised that I got it filled at $1.50 because when I was placing the trade, the bid ask was just $1.20 by $1.30. And then I just thought, $1.50 sounds great, gives me 43%, gives me $1,800, and boom, just a few seconds after I placed the order, somebody took the other side of the trade and wanted to predict the downside or the upside here, I guess, participate in the upside. There we go.
Not too bad there. Yeah, yeah, getting filled near the high of the day.
Yeah. So this works out perfectly, and that's kind of all we have right now. I didn't see anything super interesting popping up. I was keeping an eye on oil stocks because I wanted to see if there's maybe crude oil pulling back a little bit here, and we have another opportunity with Oxy or Exxon Mobil, but didn't see anything interesting. So I think over the next few days, since I do have a few positions available, I'll just park the money in T-bills, and right now they're paying for 4.5% or something like this. So might as well.
You do that, Marcus.
What are you doing? I just realized I keep blabbing away here. So, what's your plan?
Well, for the markets,
Yeah, I don't know.
yeah.
Whatever.
Oh, I mean, right now I have some cash and I'm looking for an opportunity. I don't really expect a big move between here and the end of the year, but you never know, right? The probabilities suggest a Santa Claus rally. I would like to get some new positions on. And you're right. I was keeping an eye on crude oil too, in hopes that we'd be able to get into maybe Exxon again or uh, Oxy, but not the case. So, I, I don't feel the need to do anything right now, but I'll keep my eyes out
Yeah,
or open, not out. You
up,
don't want your eyes
open.
out. You want
Eh,
keep an eye
something like
out.
this.
Yeah. Okay.
Anyhow, so hey, we just want to say we appreciate you being here with us pretty much every day of the year, every day that the
Yeah.
markets are open. It was a fantastic year. It was just a super interesting year. If you look back at the markets here and see where we started the year, right? So right here, basically at highs, then we had this massive. Oh, that's 2022. Sorry. Here's a 2023. So after we had the bear market, right? At first, it was kind of up and away. A little bit of scare here recently, but then moving higher, close to all-time highs in the S&P, already making all-time highs in the Dow. Nasdaq lagging a little bit, but up more than 40% for a year. What a great year! What an interesting year! And I mean, I think we covered it all here. I hope that you're enjoying it because if you do us a favor and give us a like. We really appreciate these likes.
Yeah. Absolutely. It's been a great year. Looking forward to another great one next year. And thanks for everybody that's viewing.
Yeah, and so I mean, my stake zone a little bit further away. I have a few more days, but the Santa Claus rally is not really helping me out here. So I believe I have to
I've
send you
made
some
some
more
room in the
stakes.
freezer, Marcus. I've made some room.
Appreciate this. Great. Okay. Hey, anyhow, if you enjoyed it, please give us a like. If you feel that somebody else might benefit from the show, feel free to share it. There's a share button right underneath here. And if this is your first time here, I hope that you become a subscriber. Hit the little notification bell. This way you get notified whenever we go live. And until then, I mean, really, Merry Christmas, Happy Holidays, and a Happy New Year. We'll see you again in 2024.
Happy trading, everybody.